Hello and welcome to the look ahead for Wednesday, the 7th of May with me, Fiona Cincotta, Senior Market Analyst at City Index. So tomorrow we'll be watching out for Eurozone retail sales. Then we've got in the afternoon, the US session, the Federal Reserve interest rate decision. And as far as earnings are concerned, watching out for Disney, Uber and Arm Holdings. So just kicking off, first of all, with the Eurozone retail sales expected to show that they stalled at 0% after rising 0.3% in February. This comes as economic data in the Eurozone has shown today. We had the PMI data, which shown that growth or business activity was stalling. So we're still at that sort of stagnant stalling area. Any recovery in Eurozone growth will potentially be hit by any trade tariffs as they come through. Still no trade deal yet announced between the US and the Eurozone. Now I've got up here the euro US dollar, because also impacting this will be the US Federal Reserve interest rate decision. Now the Fed is expected to leave interest rates on hold at 4.25 to 4.5%. It's actually very difficult for the Fed right now, because we think there's been this sort of quite a significant disconnect between what we're seeing in soft data, as in consumer confidence, business confidence, and what we're seeing in hard data, which is still showing that, you know, inflation is steadily, slowly cooling towards the 2% target. Core PCE was at 2.6%. And the jobs market is holding up. So, you know, we did see that weakness in that GDP data. Again, that can be explained out through the rush of imports. So, yeah, the Fed is still seeing that data is holding up, which gives it the luxury, at least, of being able to wait and see as to how the impact of the trade tariffs, or what impact trade tariffs actually do have on the actual hard data. At the moment, the trade tariffs, we still don't even really know what's going on as far as trade tariffs are concerned. There could be more. You know, Trump announced that we could have pharmaceutical tariffs announced within the next couple of weeks. And also, you know, if we've got the universal 10% tariffs, that's one thing, but 25% tariffs or more on, you know, what's been delayed on those Liberation Day tariffs from many countries, you know, that's a very different situation. So anyway, this is the euro US dollar. Obviously, we've known that the US dollar has been sold out quite strongly. Investors have been selling out the US dollar on that sort of sell America trade that, as we've sort of seen trade fears rise. We've seen US stocks have recovered. We'll come to the S&P 500 shortly, but the US dollar still remains below that 100 level against its basket of currencies. This is the euro US dollar. We're actually in consolidation mode around this level here, around the 113. Just above the 113 level after we rose to that high of 115.75. We've come away from that all-time high. We're still in that rising channel, but it does very much feel that we're more in sort of a consolidation pattern, waiting to see what the Fed said. The euro retail sales data, I don't think will have such a material impact on the pair tomorrow, very much more focused on the Fed. But if we do get a break below that level here at 113 because of a strengthening US dollar, then obviously that will then bring the 112 level into focus. That's also sort of around the lower band of that rising channel. On the upside, I mean, this week's highs, we're looking at the 113.65 level. But last week's highs, we need to rise above the 114.25 to create a higher high up towards that 115 level. The euro has actually found some support today as well from the news that the German Chancellor has got in on the second vote. Initially, he didn't get the necessary votes to become Chancellor, but the second vote was much more encouraging, and he is now Chancellor Friedrich Merz, which is why we've got this long lower wick on the DAX. Obviously, there were some concerns when he wasn't voted in initially, but we've seen that recovery as we get towards that all-time high. We're still about 1% away from the all-time high. Interesting, though, we're still in negative territory with the DAX. And that, I think, is because there are a little bit of concerns that remain, that linger over potentially him not having, Merz not having enough power within that coalition to have been able to win through on the first vote. Maybe that will mean that it will be tougher for him in order to get certain policies through the government. So this is where we are with the German dollar, with the DAX. We're looking at that all-time high, and this is after 9 days of uptrend, as we've seen sort of, the DAX has become very much a preferred allocation as we move away from the US. But just now bringing up the S&P 500. As we can see, we got up here. We have seen, a relatively solid recovery, but nowhere near where we are with the DAX. The DAX has gone all the way back up to all-time highs. The US hasn't. Obviously, that's because the US, which stands to have, it was initially priced for exceptionalism, and now we're definitely not there as far as Trump's tariffs are concerned. So we saw a rejection at that 57.00 level, falling lower. Basically, with the Fed tomorrow, Fed, I don't think it's got any need to necessarily sound dovish. If we did hear a dovish sounding Fed, that may give stocks a little bit of a boost to get above that 57.00 level and expose the 200 SMA at 57.50. But I don't think that's necessarily going to be the case. I think the Fed is going to be very much in wait and see mode when they meet, when they announce their decision tomorrow. On the downside, you've got the 50 SMA and also this support zone here around the 55.50 to 5500 zone. And below that, 5400 is back in view. So I hope that you've liked everything that we have discussed today. And if you do, then please do give this video a like. Otherwise, I will see you tomorrow.